Welcome to Investors Insights. Our topic today, no politics, market insights. We've got facts, data, hopefully that you will find very insightful with all the news and events that are occurring around us and how it impacts your portfolio. What can it change in terms of your financial blueprint? We think you will appreciate it, regardless of what your party affiliation is or what your political views are. We have market insights we want to share with you today. So to start us off, Bobby, based on information news that occurred over the weekend in terms of presidential candidates, talk to us about what market insights tell us and from a historical standpoint.
Yeah, we received a lot of questions yesterday and also this morning about the impact of President Biden announcing that he is not running for re-election. So we want to address that and how it might impact the markets. And our initial thought is that this announcement shouldn't have much of an impact initially, as the news isn't that surprising based on the events in the past few weeks. And so we do want to share this chart that we actually shared a few months ago that shows the S&P 500 performance in re-election years and open election years since 1960. So you can see in that dark blue line here in the chart that the market historically performs well when the market knows the policies of both candidates, like we had with Trump and Biden. So far this year, the market was showing a similar positive path. However, as you can see in the light blue line, performance in open election years, where there is uncertainty around one or both candidates' policies, the market historically doesn't perform quite as well. So again, our initial thought of the news over the weekend not having much of an impact on the market is due to the fact that Vice President Harris will, in large part, have the same policies as President Biden. We know that VP Harris is a staunch defender of President Biden's economic policies, especially around infrastructure spending, subsidies for green projects, reshoring critical industries such as semiconductor chips, and somewhat similar views on foreign policy. So there isn't much of a difference between Biden and Harris on policy. So the positive market performance seen in the chart in re-election years could continue. And so in our analysis, healthcare and cannabis may be the only two areas that are different, where VP Harris might be more aggressive on Medicare for all and more aggressive on cannabis legalization. So again, bottom line, we will be talking about political uncertainty and the impacts on the markets a lot in the next few weeks. So stay tuned.
I thought your data was fantastic. So thanks for taking time to really break that down for us, Bobby. Trey, you came in to talk about sectors and baskets and the impact of candidates in these different sectors. So go from what Bobby just said and elaborate even more.
Yeah, absolutely. Thanks, Greg. So what Bobby was looking at, those blue lines were the S&P 500, and that's the overall stock market. And if you look at history over time, whether a Democratic president wins or a Republican president wins, the market tends to go up regardless of who's in the Oval Office. But that's kind of like looking at the overall market is kind of like looking at a duck on the pond, where the duck's just moving calmly, but underneath those legs are just churning. And so within the market, there's 7 or 11 sectors, and then there's dozens of subsectors. That's where the activity is happening. Our friends at Strategas Research Partners built these policy portfolios. They built a Democratic policy portfolio, Republican policy portfolio, and that's where the changes are happening. The market's definitely reacting, but it's kind of moving in line with expectations. But on Monday alone, last Monday, not today, last Monday alone, we saw the GOP basket outperform the Democratic basket by 2.6% on one day. We saw the for-profit basket outperforming. We saw the border basket outperforming by 2.5% in a single day. The deregulation basket is up 11.3% since June 27th. These are moves that coincide with a post-election bounce. What happens is that leading into the election, you get surprised, and then markets react after the news is known. So the fact that these are acting so far in advance, we still have over 100 days till the election. I would get everyone at home some pause and just if anyone that tells you they know what's going to happen, I would check their premises. We are still heavily divided, 50-50 country.
Yes.
Our Strategas reminded us that the surprise announcement, some surprise announcement of President Biden stepping back was the fourth in what would be considered black swan events in just the last 6 weeks. So we have a lot to happen between now and election day. And so we're trying as a team here to look under the hood, look at the numbers, but also I caution against predicting the future. And so I think instead what we should do is analyze the numbers, and we will, as always, react to the present and be ready to make moves as things change, because it may seem like there's not much time, but it's somewhat of an eternity when you consider elections. Traditionally, the markets do not react to politics until August. And so we're not even at the point where markets typically start to price in one candidate or the other. And so we still have what we consider a full election cycle to go.
I thought what you did was fantastic, Trey. I greatly appreciate this. I also appreciate your comment. We have a lot going on between now and the election. And I want to say to people, that's where our blogs become more and more important, because we're going to keep you updated as events continue to happen. And we're not doing it from a news media standpoint. We're doing it to give you insight about the markets, your portfolios. And Ty, you brought up something that ties in with portfolios, which I thought was also very insightful. Talk about small caps in relation to how this market has been behaving.
Yeah, and to kind of build off what Trey was saying, when you take a deep dive in the market and see what's doing well the last couple of weeks and what hasn't, it seems like the last 2 years or so, we've really talked about the impact of the 10, 5 or 10 biggest stocks. Of course, we all know the Mag 7 and stuff like that, and their impact on the market and how much they have driven the overall performance. Well, we finally started to see kind of a broadening out here. Small caps have underperformed for, quite a while now. Well, now we're at a point, if you look in this chart, and when I say small caps, I'm going to refer to the Russell 2000 index, the 20-day highs, which is a short-term chart to kind of evaluate technical performance over just, the last 20 trading days. We have 75% of the Russell 2000 stocks above their own 20-day high. And so when you look at this is a reading that, is very atypical. This isn't something we've seen since 2011. It's massive outperformance, and it's very broad speaking. And so that's a big catalyst there. I mean, just over the last couple of weeks, as you see in this chart, I mean, you don't have to, know technical analysis to see a breakout in this chart here. But over the last couple of weeks, we had a reading of out of the Russell 2000, 18 stocks were up compared to one stock down across those 2000. And then, a couple of days later, we get a plus 17 to 1 ratio. These are very positive momentum for us that we're trying to keep an eye on as we look for the market to broaden out. And as you see, what does this mean going forward? Well, this is what they call a 99th percentile type of performance. So not only are stocks up, but the momentum that they're up as well, the amount that they're up. They had a huge move forward. And so as you see in this chart, typically that means outperformance for the next 20 days, 65, 125, 250 days. I mean, this is a good turn and often signifies an important market turn overall as well. And so, nothing's guaranteed. These are past results, but it's something that we're going to keep an eye on as small caps have been beaten up the last couple of years, and we're going to finally get, some catch up there and broaden out just from, 10 huge companies.
Yeah, and a broader market would be a healthier market. You agree with me on that, Ty?
Absolutely.
Yeah. So we would love to see that. So in all the chaos that's going on around us, here we are looking at a market that actually is showing a lot of positive in terms of broader based and healthier. So thank you for bringing that to our attention today in the Portfolio Strategies Committee. And hopefully our viewers will find that invaluable as well. Folks, this goes on every day, discussions, debates, reading the research, looking at the technical analysis, checking to see how things that are occurring will impact your portfolio or your financial blueprint. It's also why we're on Facebook, Twitter, LinkedIn, YouTube, our podcast. We're going to continue to expand those, but we do that not only to keep you informed, but for you to share it with family, friends, colleagues as well, so that people don't have anxiety during these times. We hope this has been invaluable for you. You get a lot out of it. Keep the emails and the phone calls coming about topics and questions. Bobby started off by saying we had a lot of questions about, Biden stepping down as to run for president. We are open to discussion. So we thank you for believing in us. And every day we're striving to see to it that our clients have better, richer, fuller lives. Take care. Have a great week. It's not going to be dull. Thanks.